All right, yeah, we are back. Very happy to have our good friend Scott Bradley from the LSE, head of sales and global business development for the LSE, back with us for the first time in a month or so. It's been a while. Scott joining us obviously remotely, as everyone continuing with social distancing and working remotely for the most part. It's been a trying time for the markets, to say the least. We've had volatility across global markets, lots to get to when it comes to obviously volumes, record volumes for the LSE. We've had record volumes for North American markets. Let's bring Scott in right now. Great to see you, first of all, and speak to you, Scott. I hope you and yours are all doing well in this crazy time that we're all dealing with.
Thank you. It's great to join you. Yeah, very well. Thank you very much, and I hope likewise.
Yeah, no, we're continuing on here. We obviously separated everyone to different corners of the room, so the show must go on, as they say. Scott, we do something here on the show every single day, and that is show the profits from Day Trade the World from the prior day. For the first time in a while, as far as I can remember, the LSE popping up to number 2 on that list as far as profits from this country, or this company rather, yesterday. Let's talk a little bit about, first of all, obviously extreme volatility, not only here in North America, but in Europe and the UK as well. Tell us how, the month has been, the past few weeks at least, as far as the volatility goes and record volumes that you're seeing on the LSE.
Yeah, absolutely. So, wow, what a few months it has certainly been. First of all, lit continuous markets have reversed what's been a 2-year decline in value or volumes traded, really. So market share. So market share declines that we've seen from the lit continuous that I've talked about in the past, moving to alternative venues. We've seen that reverse slightly. So if you look at 2019 lit continuous numbers in Europe, we're talking about 28 billion euros of activity on an average daily value traded basis. Now, if we look at Q1 in 2020, then that jumps from about 28 billion to just over 41 billion euros of activity on the lit continuous market. Now, if you look at March specifically, that jumps to about 58 billion euros traded on a daily basis. So that's quite a significant increase in both absolute value traded, but also relative value traded versus the other venues. What we have seen is that increase, that flight to the lit continuous, the flight to the primary markets. LSE, for example, London Stock Exchange, is in March, I think, recorded something like about an average of about 80% of the share traded in UK securities. Q1, it's averaging at about 78%. So that flight back to the lit continuous trading has been primarily at the expense of OTC and SI liquidity. Now, I've talked a lot in the past about SIs coming in, both bank and proprietary ELP, electronic liquidity provider, SI, coming into the European landscape and providing liquidity at the expense of on venue, quite often, activity. Now, that trend has reversed in Q1. We've seen dark activity on an absolute basis increase significantly. If you look at dark block trading, particularly sort of midpoint dark block trading, Turquoise Plato Block Discovery being a good example of that as the leader, that has seen approximately a 1 billion increase in activity month on month since December. So we're talking about 5.5–6% share of the market and about 6 billion euros of activity happening in the dark block venues on a daily basis. Now that jumped to almost 7 billion in March. So we've seen in relative terms, probably not as much of a shift as people would have thought, but definitely that increase in lit activity at the expense of the SI and OTC. Now, when you look at a couple of the areas on the LSE market that I often flag up, the ETP space and the international order book, ETPs have had a fantastic Q1 on London Stock Exchange. I think, if my numbers are correct, somewhere in the region of a 150% increase in turnover in Q1 versus 2019. If you look at the international order book, the world's largest DR, Global Depository Receipt program, that is also up over 100% in terms of turnover versus 2019. Now remember that IOB is where the Russian securities in particular are heavily traded, oil and gas securities, which is no surprise there's a lot of activity in those taking place. But if you look at the ETP market, quite often some of the most heavily traded ETPs in London are actually the S&P 500 or the FTSE 100 ETF. Now, what we've actually seen, if you look at today, for example, CRUD, LN, is the ETP that tracks the WTI. It's a Wisdom Tree ETP, which tracks the WTI crude oil index. Now, that is our most heavily traded ETP on the London Stock Exchange today, and I think yesterday as well. So if you combine the fact with in London, you've got obviously BP, you've got Royal Dutch, big oil gas securities, it's no surprise that we're seeing that kind of increased activity during the certain times of or times of uncertainty that we've had. Now, you mentioned volatility. If you think back to mid-March when the volatility really kicked in, we saw that increased volatility through the end of February into March. But the week of the 9th to the 16th of March in particular stands out as being where we saw the real significant sell-off globally by the quant funds. And I think it was, correct me if I'm wrong, but I think it was Morgan Stanley's quant prime brokerage team put out a note talking about that big quant sell-off and that degrossing or deleveraging of funds taking place that drove a lot of that increased activity in Europe and globally. Now, what we saw in London was we saw huge trade volumes in terms of activity, but we also saw a decrease in the the trade size. So whilst the number of trades increased, and we saw our record ever day, I think it was March the 12th, if I'm correct, 2.9 million trades happened on March the 12th, beating the previous record, which was in June 2016, which was the day of the referendum for Brexit, which was 2.7 million. Now, the referendum date in June 16 traded about 14 to 15 billion pounds notional, but March the 12th traded somewhere like 10.5 billion pounds notional. So whilst we saw March had over 45 million trades take place, which was gazumping the previous record of 25 million trades for a month, we didn't see any notional records. So the size of the trading's decreasing, but the number of trades increasing, which ties in with the type of activity and the volatility that we've seen.
Scott, I'll jump in here real quick. Obviously, lots of data there, lots of information to kind of digest. You mentioned the oil ETF there briefly. Is that something that has been a trend that you're seeing? Obviously, we had a huge move down in crude markets. We continue to see, 18-year lows again today for crude oil prices. Has that been a trend over that time? And if so, are there individual names outside of, the funds that are moving as well?
Well, I mean, as you know, I can't really talk about individual stocks too much. Maybe what I would say is we often find outside of the S&P 500 and the FTSE 100 ETF, the ISF iShare, we do see a lot of activity in the ETPs, including physical gold. Now, physical gold, I think today was our second most actively traded ETP product on the market. So yes, during the increased volatility that we see in the marketplace, we do see people trading a lot of on-exchange, on-book activity in the likes of physical gold, in crude. So it's not just the index trackers that we see that activity. I think obviously those volumes, they are nothing compared to what you see in North America, but that is over 11% of the LSE's total activity now taking place in the ETP market. Now that's not insignificant. That's reaching towards that 700 million pounds a day of activity. I think Q1 was averaging somewhere around 670 million pounds. So it's not insignificant, and that trend is only growing.
On the way back up, we've obviously had, the move down that you mentioned, increased volatility, crazy moves in the markets in general. But on this kind of, rebound that we're seeing overall in equity markets, volatility has come in a little bit. Have those numbers started to decrease at all? And I mean, only back to a point where, we can call it somewhat normal, or is it still very heightened?
Yeah, so really the end of February into March and then to the beginning of April, we saw that heightened activity. You're absolutely right. I think things are starting to calm down a bit. I think that's a lot to do as well with, in the broader market, the BCP, the resiliency planning that people have put in place has meant that teams are now able to focus business as usual, and the volatility has calmed down to a certain degree. That's certainly something we're seeing. Now, in the dark block trading, we saw March an absolute belter of a month in terms of records and the liquidity that we saw coming through our dark books on turquoise. That has also decreased in the marketplace, along with the values and the volumes we're seeing on the primary exchange too. One thing I would like to point out, just maybe mention, is something around that resiliency and maintaining an orderly and robust marketplace. I think across Europe we've seen a number of measures take effect to help maintain those orderly markets. Now, if we go back to March and in mid-March, we saw the circuit breaker mechanisms that the London Stock Exchange employs, which are on a security by security basis. They kicked in on a significant number of occasions, but helped maintain that orderly market and kept the market open for investors. So we feel very, very comfortable with the lot of work, a lot of planning that's gone into place in order to facilitate that ongoing market infrastructure. And whilst the market now starts to move to business as usual activity, and we look at new initiatives and projects going forward with our clients, I think we're starting to see a settling in the marketplace.
Yeah, and it's good to see finally. I mean, we've had circuit breakers, as you mentioned. We've had volatility halts. It's been a crazy few weeks, as you've been mentioning. Great information as always, Scott. All the best in the near future. I hope we can speak again soon, and stay well for the time being.
Thank you. Likewise.
There you go, guys. Scott Bradley, Head of Sales and Global Business Development from the LSE. Number 2 on our profit list yesterday here at Day Trade the World. So nice to see other markets outside of North America popping up on that list. Let's go back over to Sean.